I am sure sports. You know me there. I'm coast to coast representing. I mean, I say this is righteous representing for Omar. You don't know, come get the sports over here from near and far. Boy. Me say I am sure sports, one thing me sure about. When me say sure, that me not doubt. Come get your sports, get it over here. Come subscribe, repost and share. I am sure sports, one thing me sure about. When me say sure, that me not doubt. Come get your sports, get it over here. Come subscribe, repost and share. If me not sure, that me not say it. Know who score, that me not say it. Never know the game play, that me not say it. If me never seen a game, me not know who play. For your sports news, better come over here so. For your soccer news, then come over here so. If you don't love sports, still come over here so. For the day done, you are gonna love over here so.
So when it comes on to behavior concerning football, Jamaica is decent. I am sure that if we can get all of these things done, set in place by the end of April, it gives us enough time before the World Cup campaign. Not afraid of no Brazil, no Argentina with these crap of players. We are good enough. Remember to like, subscribe, share. Listen, comment, let me know what your thoughts are.
Made with 18 Jamaican herbs and spices. Add delicious, bold flavor to your next grilling experience. Flavoring sauce, a marinade, basting, condiment, or topping. Trick Nick Jerk Barbecue Sauce.
Nick Jerk Marinade gives your meats and vegetables authentic Jamaican jerk flavor. The spices are directly from Jamaica. Spices like jerk seasoning, allspice, Scotch bonnet pepper, fresh scallions, thyme, ginger, and garlic. The key ingredients to a great jerk marinade. 0% sugar and low in sodium. You want to try it?
All right, greetings, good evening, welcome to I Am Sure Sports. I'm your host, Manins Man. Today we continue our series, our series of financial webinar, workshops, whatever you want to call them, as we want to be as comprehensive as possible as we conduct discussions about sports. And so tonight we want to offer you the opportunity to get some financial advice that will possibly enable you to be better managers of your money as you look to the future outside of sports. But first and foremost, let me say a big thank you to the sponsors of this video. Our sponsors are Launch Legacy. Launch Legacy is where they handle risk and seek legacy. So for all your personal insurance needs in Canada and the USA, visit them at launchlegacy.com or call or text them at 647-989-0782. Listen, someone is there on the other end of the phone who will be able to advise you and direct you to get you to a place where your money starts working for you. So give them a call, send them a text, or visit them online at launchlegacy.com. Also want to say a big thank you to Prestige Finance, lending a helping hand when you need it the most. You can call Prestige Finance at 876-884-7390. They're located in Linstead, St. Catherine, Jamaica. And if you call them and tell them that you heard about them from I Am Sure Sports, they will lend you up to $100,000. Look at this. No processing fee, same day processing, and 0 to 4% interest rate. That's what they're offering. Also, a big thank you to Trick Nick. Trick Nick is a Jamaican owned and operated company in Canada that uses authentic Jamaican herbs and spices to make all their products. They have curry paste, jerk sauce, barbecue sauce, jerk rub, hot pepper sauce, and a host of other products that will help you in your cooking needs. Big thank you to all our subscribers, all the persons who watch our content, who share the content. We really appreciate that. And so as you come on tonight, we ask you as usual to hit the like button, hit the subscribe button if you have not yet, subscribe to the platform and share the content so that someone else will know what we are doing. Tonight is a very, very special night. I have two of my very good friends with me tonight, and they when it comes on to financial advice and direction, they are very good, right? Excellent, excellent, excellent. And so this promises to be an enlightening, uh, 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 informative, and intellectual, a financial capacity building um, in your personal life. And so I hope, like me, you have a pen, you have a notebook to take notes, right? And write down stuff and take the transferable principles and apply them to your life. You may hear something that could change the direction of your life from a financial perspective. No, you can't let me down, because when we are discussing playing football, a lot of you are here with a lot of comments. Now we are talking about stop playing with your money and being serious about it. So you better jump on and come on and give all your comments and all your shout outs. All right. So tonight we have with us uh, Mr. Patrick Reed. You met him a few months ago. Well, in February, that is, early February, when he did a webinar about, just investments and opportunities available in Canada and in North America. And so he's back with us tonight. He's from Launch Legacy. We also have from the Bank of Jamaica, the BOJ, we have Dean White. He is a risk officer, chief risk officer, and so we'll be hearing from him tonight. He'll be doing a presentation, so I'm going to invite them both to come on now. I'm going to stop the talking and so you can remember them, see their faces, and hear a little bit from them, and then Mr. White will take it from there and begin his presentation tonight. All right. Welcome, 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 Mr. Reed, Mr. White. No, I can't even. Patrick and Odile, let's do it that way, because you guys are going to have to refer to me as Manning's man. All right.
Yes, Manning's man.
There you go. Welcome. So good to have you both. It's my pleasure having you this evening on I Am Sure Sports. All right. I think they're familiar with Patrick. Odine, why don't you begin by sharing a little bit about you for our listeners and viewers, and then we will go from there.
All right. Thank you for having me, Manning's man. First of all, I feel so underdressed. Look at the two of you just looking so sharp, and I feel like I need to go get my blazer and stuff, but I dress the part, it's a sports program. So thank you for having me. My name is Odine White. I'm the Chief Risk Officer at Bank of Jamaica. I'm also a very good friend of Manning's man, and it's a privilege to share some of my insights and experiences where money management is concerned. I've been in finance for almost 2 decades, so this is my comfort zone, and I'm hoping that you will be more comfortable after I'm done sharing about how to manage your money effectively. So that's it for me for now.
Yeah. And welcome again, Patrick. Anything you want to say? I know you have been here a couple of times, but go ahead and remind the people about you and where you are, where you operate, and tell them a little bit again about Launch Legacy.
Yes, good night, viewers. Good night, Manning's man, and again, it's a pleasure being here with you guys again. It's always good to have good information putting out, but you can only implement when you take actions. Well, of course, I'm a soccer player. A lot of you may know me. The younger ones may not. Grew up in Jamaica, played in the Premier League. Um, and I always have to share this story because my mom passed away from cancer, and she had no insurance at that point in time. And that's when I just broke out into the soccer world and starting to get a little income from the soccer. As I said, my mom didn't have any sort of insurance, and when she passed away, we had to punch in all the little we had to make sure that she had a proper sending off. So after going through that experience, I know other players have gone through the same, and we just need to make a stop to it, and educate our brothers and sisters, on how money work, and the advantages that you can do with some of these investments and products that are on showcase here today.
All right, awesome, wonderful. Thank you so much, Patrick. Thank you so much, Odin. Well, tonight Odin he's going to take the lead on this, and so I'm going to just hand over to you now, Odin, so you can go ahead. We will be here, so we'll be in the background. We'll be around, so you can begin sharing, and when you're ready, we will bring up your presentation. So go ahead.
All right, thank you, Omar, and thanks again, everyone, for having me. Finance is something that a lot of persons sometimes get intimidated by, but the truth is, it is a means to an end. It's a means to us fulfilling our dreams and our financial goals. And so tonight, I want to be very practical, and I want you to come along with me on this journey to fulfilling your financial goals. So if you can just share the presentation for me now, um, and I will proceed. Right. So the
All right, so
title of
let's do this.
yes. All right. Thank you for that. So the title of the presentation is Money Management: The Key to Your Financial Goals. And what this really encapsulates is the way that we go about handling money, right? And so just as a basic definition of what money management is all about, it is simply a process of ensuring that you have adequate financial resources to achieve your personal or corporate financial goals. And I heard Patrick speak about, his mom not having insurance, and that's one of the tools or the channels through which we're able to manage our money. Okay, so we'll talk a little bit more about insurance as we go along. So, money management is just the way you go about managing your money to achieve your financial goals. Now, as we are talking about money management, I want to look at three different channels through which that can happen. You have the individual or the business level, which has to do with you and how what happens to money when it comes through your hands. All right. The first thing you need to know is that an income and expenditure budget is a must. There's no way that you can manage your money effectively without operating by a budget. And we'll focus a lot on that for the rest of the presentation. But some other tools that we have available are cash flow. Your cash flow profile at companies, especially small and medium sized enterprises. They cannot survive without understanding their cash flow profile. You have months, you have times in the month when you have deficits, and you have times in the month when you have surpluses. And understanding the ebbs and flows of money coming in and out of your business is a critical component to managing your money. And of course, having smart financial goals is important. The whole idea of managing your money is a means to an end, and the end is achieving your financial goals. So if you don't have a goal, or if you don't have smart financial goals, then you won't have anything to work towards. All right. And SMART here is an acronym for specific. So your goals must be specific, they must be measurable, they must be achievable, they must be realistic, and they must be time bound. So every goal that you put down on paper, you want to buy a house by the end of 2025, or you want to buy a car by the end of next year, and you must be specific about the type of car, the price range in which you want to buy the car in. You must be able to measure your progress towards that. So you need to have a saving plan towards maybe saving towards the deposit, especially for house. Typically you need 10% of the value of the house to deposit on to be able to qualify for a mortgage. So all of those elements of having a financial goal is important in order to demonstrate that you are clear about what you want to achieve. We're going to go now to the financial institutions channel. And of course, financial institutions include banks, building societies, um, microfinance companies, and so forth. And some of the tools that are available through which you can manage money are savings accounts, fixed deposits. So when you get a lump sum or you get a windfall, you can put on a fixed deposit for a certain period of time and it earns you a pretty decent interest rate. And now we see where interest rates are increasing, and it's an opportunity for companies and individuals really to take advantage of the higher interest rates available on your savings and deposit accounts. You have investment accounts like repurchase agreements, you have individual retirement accounts, you have pension funds, and that's more long term. You're putting down money towards retirement and so on. And you have unit trusts and mutual funds, which is an investment vehicle that allows you to participate in a very diversified way in the financial markets. Um, and then segueing nicely now into the financial markets component, you have corporate bonds, derivatives, which is for more sophisticated investors. You have stocks and equities, so you can trade and buy and sell stocks for capital appreciation purposes. And you can also get dividends. You can get income, a steady stream of income from dividend paying stocks. And you have fixed income instruments, which guarantee that your principal will not be lost, but you can earn interest as you go along. So those are some of the tools available. Now we're gonna go to as I said before, the focus for this presentation is really to look at how we can do a better job of managing our money. And we need to understand how the tools work. And so let me give you an example. So let's say you want to, you know, manage your money on a short-term basis. And when I say short-term, I'm talking about on a monthly basis. The income and expenditure budget is the primary tool, right? And also for companies, your cash flow profile. As I said before, you have some periods in the month, like around month end, when you have inflows of money is coming in, and then maybe by mid month, the coffers go down a little bit. So you need to understand the ebbs and flows on a monthly basis. The primary channel through which you can manage your short term horizon um, is through the commercial banks and through the money market. The money market is just where you can buy short-term instruments. You can put down money for a 3 months there, a 6 months there, a 9 months there on treasury bills and so on. And that's where you invest in treasury bills in the money market. And one red flag you need to look out for when you're managing money in the short term is to not spend more than you earn. And I really want to emphasize this because a lot of Jamaicans and people in general, they don't practice this principle of not spending more than you earn. And what happens is that you end up in debt, credit cards and overdraft facilities, which attract high interest rates, and you spend years paying that off when you could have been channeling that money into interest earning assets towards achieving your financial goals. So this is a major red flag. Do not spend more than you earn, no matter what. Okay? And I understand it's a very challenging environment and persons are losing income and they're losing their jobs, but you have to maintain this discipline. Otherwise, you will be derailed towards achieving your financial goals. The second horizon I want to focus on is over the medium term. And when I say medium term, I'm talking about 5 to 10 years from now. The main tools available to us are fixed income instruments, stocks, equities, mutual funds, and unit trusts. And the channels through which you can um, access these tools are through investment companies and the stock market. And a red flag here is to ensure that you're not investing outside of your comfort zone. A lot of us have higher risk appetite, and that means that you're willing to take on more risk. You're willing to lose your principal or a portion thereof for example, in certain stocks. And some other persons they don't have that appetite. They prefer to just keep their money in a fixed deposit, and that's okay. You need to know what your comfort level is and stay in your lane. And on the long term end, for example, when you retire, you want to look at things like corporate bonds, pension funds, and individual retirement accounts. And the channels through which you can access these facilities are like with bond issuers, so whether it be sovereign bond issuers or corporate bond issuers, and you can also utilize insurance companies' products. And the major red flag here, and I want to emphasize this as a major one, maybe the second major one, is procrastination. What does that mean? It means that we wait until it is almost too late to start putting money towards our retirement. People have a tendency to be focused on the present and they want to get what they want now without thinking about long term. What happens when you retire? What happens when your income earning capacity is reduced? When you can't be active and all over the place like Manning's man, right? What happens when you can't earn? You need to put aside money from now so that when you retire, you can be comfortable and live and maintain your standard of living. All right, so we're going to go now to the budget. And the budget is the primary tool by way of achieving our financial goals. And I say primary because without this is like foundation. This is like the steel and the block that you're putting into the ground. And if you don't have this foundation rock solid, nothing else that you do after this will be sustainable. And the budget typically comprises three segments: savings, expenditure on consumption items, and investment. So save a little, which is around 20% of your disposable income, or should be in that range. Spend a little, which is approximately 60% of your disposable income on a monthly basis, and invest a little, which is another 20%. So the total there is 60 plus 20 plus 20, that's 100%. So that's what your budget should look like in principle. All right, so let me show you some examples of how we can construct a budget around $100. So just using $100 as the case for simplicity, we save $20. That $20 is 20% of that, right? What does that go towards? If you have a house or a car, you have to maintain it, right? And you have to pay house insurance, property insurance, motor vehicle insurance. Your car want fix or it want service, and that fund that you put down every month is towards that. You don't service a car every month, but you don't want when your car is to be serviced in say 6 months time, you have to be scraping up money and borrowing money to pay the mechanic or the service provider. So it works as well if you are saving towards a house or towards buying a car. And so this is something that we should have as a staple in our savings component of our budget, putting money down towards the acquisition or maintenance of our assets. All right, because if you don't maintain your assets, they will depreciate in value faster than they ought to. And in the case of a house, those assets actually appreciate in value. So if somebody were to ask me what would be the first asset you try to acquire, I would say a house, because when you get a house, you automatically get access to the equity in that house because the value of the house is going to increase over time. Whereas in the case of the car, it depreciates the minute you drive off the lot. So those are some things to bear in mind when you're saving towards acquiring or maintaining assets. Health insurance and vacation, you must be able to enjoy the fruits of your labor. So you put down money towards vacation. Some people have a habit of borrowing money to pay for their vacation. That is not a recommended strategy. You should be deliberate and intentional about saving towards your vacation. Then on the spend side, which is the primary component, of course, because you can't survive without spending money on these things. Food and bills, of the $100, you should probably allocate $30 to that. For some people, it could be a little bit less, could be a little bit more, depending on your household size and so on. But in principle, it should be around $30. living expenses, bus fare, buying gas, paying your helper, giving the children lunch money, buying stuff to the laundry and maintaining your standard of living is what living expenses would encapsulate. And that would basically be $20. So that's 30 and 20, 50. So you have another $10 to play with. What do we do with that $10? Typically, you need to have an emergency fund, right? Um, and there's a rule of thumb that we should always have 6 months worth of income in an emergency fund, just in case the economy goes into a decline and people start losing their jobs, and God forbid you are one of those persons. You need to have at least 6 months salary saved and tucked away somewhere. Now, at this rate, we would not be able to accumulate 6 months salary um, until around, I think it's 9 years at this, using these assumptions. But the point is, it is something that you should be disciplined about and be deliberate about. Always put some money aside for a rainy day, as my grandmother would say. And then charity. Charity is something that is discretionary. A lot of persons don't really emphasize giving, but I do believe in the principle of, giving back to the less fortunate, giving to somebody, a friend or a family member who is in need. And sometimes it could very well be somebody who you really want to help, but you don't have the wherewithal to help them. And so putting aside money intentionally for that purpose is also a good practice. So we just put $5 there. So the total load that would come up to $60 for the spend. And then we're talking about investments. I heard Patrick earlier mention that there are several opportunities now that are available. And let me say this, in a downturn, in an economic downturn, it is one of the best opportunities to invest. A lot of persons are of the view that when the economy is in a downturn, you must hoard everything and keep it. And I understand why people feel that way, because you don't know what tomorrow holds. But here's what happens when you invest in an economic downturn. You get to capitalize on the gains that come when the economic cycle goes back up. So when the economy recovers from COVID and from this Russia-Ukraine situation, you are going to be able to benefit in terms of rates of return on the assets that you invest in now. Assets like real estate and stocks and bonds are an attractive opportunity to invest in right now. You might have money on a fixed deposit and you want to take a chance. Talk to your investment advisor, see what the options are, but don't allow the economy to dictate how you manage your money. You need to manage your money on the basis of your financial goals, because the economy is going to go into cycles, downturn and upturn, downturn and upturn. That's the nature of economics. But what is not going to be tolerated is if your money management goes into that same pattern of down and up and down and up. There needs to be consistency and a deliberate approach to achieving a particular financial goal or set of financial goals. And the last part of this budget has to do with making your money work for you. That's a simplified term for capital appreciation. I work very hard for my money. So what am I going to do? I'm going to make my money work for me too. My money is my employee, and I need to make it work for me. So that is where investment comes in. When you start to talk about investing in the stock market, where you can get capital gains and dividends, that's your money working for you. When you can invest in a small business and the business generate profit and you get you get dividends from those profits, that's also another way that your money is at work for you. So be intentional about this as well. And I put $5 here, but for some persons, depending on your risk appetite, you can go $6, you can go $7. Or for some other persons who are more conservative, you might want to go $3, $2. But be intentional about making your money work for you. All right. Now the last thing I want to talk about. My name's Manuel. You there?
Yeah, man, I'm still here.
Yeah, you can just go down.
All right.
So
But
here are some tips.
Odin, we have a let me just, because we have a couple of persons, right? Let me just
Yes.
IT push IT Push says you need to have a side hustle in case of emergency. And then he says invest in your side hustle or own business or income generating asset. I don't know if what are your thoughts on that?
I love that. And side hustle here is simply another term for using your hand, using what you have in your hand, using your gifts and your talents to make it into a revenue earner. So one of the things I am very good at is teaching, right? I'm not a teacher by profession. I'm a banker, but I also have a side hustle where I teach and I earn in that way as well. It could be for you, maybe as a salesperson. It could be something that you're good at in terms of making with your hands, or it could be buying and selling goods. Whatever it is that you are good at, that you are talented at, it is important that you allow that talent to generate revenue as well. So I love that. Um, and don't be intimidated by what you see other people doing, and if they don't, if it doesn't, if you don't have a talent like Manningsman, for example, to have a show like this, but you can talk, right? You can go to a high school and give a motivational talk, or you can go to a community center and help teach extra lessons, and before you know it, that opens up opportunities for you to earn in another way. So even if you're not earning on your talent right now, don't be shy about utilizing your skills and your talents, because you never know when the opportunity will come by that somebody sees you and say, "Oh, I'm gonna hire this person because I see that they're diligent and they're good at what they do." All right. So don't depend on your 9 to 5. Whatever your 9 to 5 is, that should be your primary source, but you need to also have other sources of revenue. And I support that suggestion as well.
Yeah. So and then CC Sports Lab says why aren't these percentages? He actually said 20%, spend 20%,
Yes.
save 20%. No, save 20%, spend 60%, and
60%.
invest 20%. And then he just used $100 as a
Right.
breakdown. So that's what he started with. Sports
Yeah.
Lab.
So you can remove the dollar sign and just put percentages.
Yeah, because that's what he
Percentages.
started out. And then IT Push is saying that um said that you should scrap life insurance, and then he says monetize your skills slash talents. But Patrick's story would really negate
Yeah.
the idea of scrapping life
Scrapping
insurance.
insurance. Yeah, yeah. I don't. I understand because a lot of persons say, "Well, I am paying my insurance premium for 20 years and nothing don't happen." Where does all that money go? It doesn't go down the drain, you know. It's still your money. And when you want to pull down from your insurance policy, there's an option available as well for you to pull down on the cash value in your insurance policy. So don't think that it's just money going down the drain. It's like a long-term savings plan, but you don't want to take that risk because if you are, God forbid, you get a disability or you pass on, before quote unquote your time, and you want to ensure that you have something to leave back for your family, then like what Patrick said, they had to come together and pool their resources to ensure that his mom got a proper send off. Now, an insurance policy does that pooling together on your behalf. And an insurance policy is something that every household must have. The primary breadwinner in that household must have an insurance policy because if that income is lost, your family is going to suffer, whether it be by way of a disability that you can't work anymore or by your untimely death. So these are some realities that we need to face, and scrapping it is not responsible. It's not a good money management strategy because you are not in control of your destiny. You don't know when your time is going to come, and you want to ensure that your financial goal that you have set is still able to be achieved, even if you're not here. All right. So that's what I would say to that comment.
Can I touch in a little bit on that too, Mannings man?
Go ahead, Patrick.
Yes. So the scrapping, you see, a lot of people don't really understand some of the benefits of the life insurance because there are different types of life insurance. Of course, there's term, there's whole life, and there's also universal life. So the universal life has a lot of benefits to it, which carries a death benefit and a fund value to it also. So all
Right.
the money is not going into just the insurance. Some of that money is going aside,
So
right?
investment by investment purposes.
Investment,
Right.
right? So, and I have a specific brokerage here that I use. I won't call any names right now, but with them, you can get the life insurance with investment. You can get a critical illness with it also. You can get a disability with it.
Right.
And you can, people are always talking about they pay the insurance and they don't get back anything if nothing happens to you. There's also a return of premium that you can get
Uh,
with this thing also. So
absolutely.
scrapping the life insurance, it's a big no-no. And as Odin said, every family member should have life insurance, especially if you have kids.
Yeah, definitely.
Yeah,
And
go ahead.
and one of the things that I didn't mention as well is that you can actually structure your life insurance policy to be convertible to
Yes.
an investment product at a certain point. So I think it's a term life. You can
Yeah.
contribute premiums for a certain number of years, and once it hits that number of years and you're still alive, that is convertible to actually money in your hand, and you can actually take that money and invest it, and the money doesn't just sit there; it earns interest while you are contributing your premiums. So it's good to talk to an insurance advisor to get more clarity on how that works and what you can afford. And this is a danger. Don't try and pay an amount of premium per month that you cannot afford.
Yeah.
Because if you stop paying the premium, the policy going to lapse and you're going to lose all that premium that you had contributed for the period up to when it lapses. So be wise and be cognizant of what you can afford. If it's not $10, it could be $5. But do something. Make sure you are putting together or putting aside rather something in case you either have a disability, lead to an accident, or you die prematurely. All right. So just to wrap it up, here are some tips, some budgeting tips. Under savings, be consistent with what you can afford. Same applies with the insurance. Don't put savings in an account that is easy to access. Don't put money in a savings in an account that you have a debit card for. Because what's going to happen is that you're going to be tempted to draw from it. So, like what I have a savings account that I don't have access to unless I go into the branch, and I hate going into the branch. So, to deter me from going into my savings, I did two things. I don't have a debit card for it, and I put my daughter's name on it. So it adds to the guilt. Every time I go into the account, I'm actually saying to myself, "You're going into Amaris's money again."
Yes, taking from your data, bro.
You understand? So that is something that I have used to deter me from going into my savings. I mean, sometimes I have to go in there because of circumstances, but it's a reminder to me that do not go in Amaris's money. That's Amaris's money. That's not your money. That's how I have to psych up myself. Number three, set aside a target that you want to achieve in terms of savings for the year, and ask someone to hold you accountable to it. And when you achieve that target, reward yourself. Buy yourself a nice watch or a nice pair of shoes or something to say, this is my reward for sticking and achieving my savings target. On the expenditure now, which is a big one.
Odin and Patrick. So we have a
Yes.
couple of questions. Uh, getting a little feedback, but we have a couple of questions. One is by Neo Sovereign, the Woolmerian in the building. He says, suppose you already have a term life policy. Can you transfer it to another insurer with an investment feature as a part of it?
Well, it all depends on which product provider you're with. I know that the term policy, um, yes, you can convert them. You can convert them into an investment policy if you want. You can convert it into a permanent insurance if you want. You know, there are options, but you have a certain period of time that you have to do it before.
Yeah.
And
Yeah.
and and, and the term is just like renting, right? It's just for a period of time, and after that period, the premium increase, right? So you have to consider when you're buying term.
Yeah. And
Yeah.
if you're talking about moving it from one institution to the next, you have to also look at whether or not that's gonna cost you too much.
Yeah.
And if the institution that you're with now does not offer the option to transfer or to convert to a investment policy, then you can probably have that discussion with them and say, listen, I'm going to another institution, and you start to negotiate, and you'll be surprised how quickly they are able to accede to your request. Because remember, they serve you, they serve your purposes, not the other way around. And that's why I said earlier that we need to be clear on what our objectives and goals are, and we need to know how these products work so that we can use them as a means to an end. So we are using them, they're not using us. All right, that's why they exist. They exist for us to use them to achieve our goals, and that's why
Yeah.
you should use it.
Yeah, and then I see IT push here saying most companies have life insurance for the employees, and there is also, I think NIS. But is there companies offer life insurance, or is it retirement? And what they do, you have to contribute a part. Do there are companies that pay life insurance for the staff? I don't know about that.
There is, yeah, man. They have like a whole, what do you call it, a group life arrangement
Okay,
for all employees. So once you're an employee of the company, you're automatically enlisted in the group life.
right, but that's a contribution out of your salary, though.
Right, but
Yeah, yeah, still.
it is still when they pool resources, they get more
Okay.
benefits. So it's a good way to contribute to life insurance as well. But you don't want to depend on that, because once you leave the company,
Yep. Yeah.
guess what happens?
About to get there.
You're on your own, right?
That's done.
So you need to have a separate one for
Personal.
outside of your company, and then the group life for the company is just in case anything happens to you on the job, and they can pay out to your family members and so on. In terms of pension, there are some pension schemes, very few, that you actually don't have to contribute to. Those are called defined benefit um, pension schemes. There are very few remaining in the island, actually, because most pension funds now are defined contribution, which means that you contribute a portion and your employer contributes a portion. And then you have individual retirement accounts where it is just you personally going to an insurance broker and saying, I want to invest in a retirement product. I want to pay no more than X dollars per month, and they will tell you what the options are, and they can design and customize something for you personally. But if you're a part of a company that has a pension scheme, most more often than not, you have to contribute a portion, and I think the law allows you to contribute up to 15 no there you go 10%, and then the employer can contribute up to 10% on your behalf, so the total is 20% of your
Yes. Again, let me jump in a little before you pass away from group insurance.
yeah go ahead.
The group insurance, a lot of people are paying group insurance at the workplace, and a lot of them don't really know how much coverage they're really getting, right? If you ask somebody, you have insurance? Yes, I have group insurance. How much it is? They
They
can't
don't
tell
know.
you. They
Yeah,
don't know, right?
right.
And sometimes these group insurance are like one times your salary, right? So it's probably a $50,000 insurance. They working, you getting 50,000 for the year. They probably have a $50,000 insurance annual. But if something should happen to you, right, and you pass away, can $50,000 really take care of your family?
Oh, Patrick is talking. Patrick is talking North American money, right? Not just not Jamaican.
Yeah, please clarify that.
Yeah,
That's
yeah,
10%.
yeah. Sorry about that, but
Right,
yeah,
yeah.
we're just saying they're working 50,000 for the year.
Yeah.
Normally, the group insurance would probably be about 50,000, 60,000 max, right? So you want to have your personal insurance, right? And as Odin said, once you leave that workplace, that insurance is done. You're naked,
That's it.
right? So always have your personal insurance to cover yourself.
Yeah.
Yeah. I see. Neo, I'm going to allow Odin to finish this part because I don't want, and then I'm going to take your next question because Patrick is in North America, and I think he could probably give you some advice because I'm going to let you respond to this when Odin is finished, Patrick, because Neo says, I don't like my term policy, but whole life expensive. I opted to invest the difference rather than pay expensive whole or permanent life. Aren't you better off buying cheap term so you can invest? All right. And then Chris Wayne says group life is a small contribution by the employee, but coverage can be up to 2 or 3
3 times
times your
your
salary.
salary. Yeah. Yeah.
Right.
That's
So
true.
so
But
those are some
here's why I can just respond to that quickly. Here's why you need to have a separate insurance, and especially term insurance. Term insurance is good because it gives you flexibility as opposed to whole life, which is just a one shot, and it does not stop, or it does not get, you don't have access to it, to the payout until unless you die. But term gives you flexibility because, like for example, if you're doing a mortgage, suppose you're buying a property, one of the criteria is that you have to have a life insurance policy that is assigned to that mortgage, and that you can't use your group life insurance towards that. That is strictly for your employer's purposes. So you need to have separate life insurance, and term insurance is cheap, it's
Yep.
flexible, and it
Mhm.
can be convertible at the end of the term, and it allows you to also have that as an option to assign to a mortgage. So if you're doing a mortgage for $20 million Jamaican dollars, usually the mortgage company says, I need to see life insurance of up to 20 million so that if you die before this mortgage is paid off, I'm going to use that policy to pay off the mortgage on your behalf. That cannot exist within the group life scheme. It has to be a separate policy, and the cheapest way to go about doing it is to do term. So don't discount the value of having term insurance,
Yep.
because it has several other purposes outside of just giving you a payout. Um,
Let me touch on that too. Let me touch on that too. The term life, the term also is a good way, just in case you have young kids, right? I'd say 5, 4 years old. You know, how long before that child can be, of age to take care of himself? You're gonna put probably another 20 years. So,
right.
just say at 24, that's another means of buying term, just
Absolutely.
in case anything happens to you before that 20 years, that child is taken care of,
Yeah.
right? And to go back to the mortgage insurance, right? When you own a home, you want to control your own mortgage, right?
Yeah.
I know you're with the bank. I know you're with the bank, Odin, but whenever the bank controls your insurance, right? If something should happen to you, right? Guess what? The bank is gonna come and say, guess what? You know what? Um, Patrick is the bread owner
Hmm.
for this family, and Patrick passed away. Guess what? No, I don't know who's right
Yeah.
maintain maintain this mortgage. So guess
Right.
what they do now? They're gonna requalify that family, which is the
Yeah.
wife now. Say for instance, the wife is not working. You know what happened? The bank wants his money. So more likely you guys have to sell that house so
Hmm.
the bank can get his money. So
Right.
you, as I said, you want to control your own mortgage, and the term
Yeah.
insurance is the best way to go about that. Also,
Absolutely. So let me just wrap this up quickly because I like the discussion. Buy foods in bulk, buy groceries in bulk once per month. And when you do that, you save on unnecessary expenditure, going every week to buy little items here and there, and you end up spending more than you would have had to if you just buy the things that you want one time for the month wholesale. Limit the number of trips to the ATM. I'm telling you, it's very tempting to have the ATM machine right next door to your workplace, and you say, "Cho, let me go draw some money for the this." And by the time you draw the money, you don't even know how the money was spent, right? Because you did not budget for that. So only draw money from the ATM that you have budgeted for. And you can do, I used to do little envelopes and put the envelopes and label them and say, this is for gas, this is for groceries for Price Mart, this is for X, this is for Y. And I would carry the envelopes home and put them in my drawer. No, I don't really do it much anymore, but that is something that if you have to do that to discipline how you spend money, please do that. Consider doing that. Number three, reward yourself for staying within your budget. This is always an incentive for me. If I know that I have stayed within the budget for the month, I actually look forward to rewarding myself. You say, well, where the money come from? The money going to come from me not spending all the money that I had budgeted, and thus that surplus is what I use to reward myself. All right. Invest a little. Stay in your lane. Know what your risk appetite is. Know what you are comfortable with, and stay in your lane. Don't try and invest with the big boys because you will lose your shirt. All right. Talk to a professional before you invest or before you do any kind of long-term investment, whether it be insurance, pension, bonds, stocks, whatever it is. Talk to a professional. I find that a lot of persons believe that they have arrived because them start investing in one or two stock and them start get a few dividends here and there. But you don't know how vicious these markets can be. And in one swooping move, you can lose your shirt. So talk to a professional to make sure you know what you're doing and you're doing it prudently. And three, keep track of the state of your investments. Take stock of your financial statements when you get them, your bank statements, and make sure you're on top of that. Don't make anybody dictate to you. You need to dictate what your investments are doing. All right, last slide. Money management is a necessary skill for us to navigate these trying times. An income and expenditure budget is a key money management tool we should all utilize. Whether you're a small business owner, whether you have a 9 to 5, whether you have a side hustle, it don't matter. You must operate by a budget. And three, achieving your financial goals is dependent on how well you manage your money. So that's my presentation, and thank you for your attention and your questions. And I hope that after you've heard what I've said, that you're now more comfortable and confident in going towards your financial goals by exercising good money management skills.
Hey, I getting I don't know, I'm getting some feedback, but wonderful. Thank you so much, Odin. Yeah, man, very, very well done. As well, we have some more comments, and so you can ask the questions now, and we will get them up and let Odin and Patrick respond to them. I have a question or two as well that I want to ask, but let me just take this from Neo. Neo says, I think he's continuing from where he was earlier. He says, and they cut your group life employee policy once you retire. If they fire you, I think you lose it completely. So I think he's saying that the whole group, the company idea need to have something separate. I think that was a discussion that he's responding to. Yeah.
Definitely agree 100%, because once you're no longer with that company, you don't have any more insurance, right? So it's always good to get your personal insurance to cover yourself and your family.
Yeah. And then Chris Wayne says a lot of financial institutions also offer bulk insurance coverage, which work out less expensive. Example, if you buy life, auto, and property insurance together versus just one item. Can you speak to that, Odin? Is that something that works?
Yes.
Yeah.
Yeah, that is very good, Chris. A lot of companies negotiate with insurance brokerage firms to bundle
Oh,
insurance
it's bundle. So it's not bulk, it's bundle.
bundle.
Okay.
And what bundling does, it allows you to capitalize on the large scale that the company negotiates with that brokerage firm. So if I know that my employer has 600 employees and I'm going to negotiate for life, health, property insurance, there's flexibility to negotiate discounts, and that's a good way to encourage your staff members to actually take part in these products. So yes, very good point. And you should talk to your HR function, talk to your HR manager if this is something that is available to you for you to be able to get, some of those discounts accrued to you. Because auto, life, property, those are critical, right? If you don't have life, if you don't have auto insurance, you're going to get, jail, or they're going to seize your car. If you don't have property insurance, you can't apply for your mortgage. You can't apply for your home equity loan. If you don't have life insurance, well, we spoke about that already. So these are mandatory, and they are critical in our bid to achieving our financial goals. So talk to your HR manager, talk to people who are in the industry, who can help you and point you in the right direction to take advantage of the bundling offers that are available in terms of these products.
All right, I have a big question, but let me get IT Push, very good book. Robert Kiyosaki, I think his name is, Rich Dad Poor Dad. It's a very good book. Devon Porter says very informational. Thanks for your presentation. This has been an eye opener. Well noted. This is Devon Porter over there in Canada. IT Push, I think somewhere in the Caribbean. Says educate yourself and your children to own and operate a business, SME. All right. Yeah. But earlier, Patrick and I were having a discussion, and so let me tell you where it comes from for me. So I was recently called by a particular institution about a new product that they have, an investment product. Of course, it secures my principal, but they said that they were offering 4.5% on $1 million local currency. That is, they had other instrument if you had it in US, so you get like 4.5% up to 3 months, and 4.7% up to 6 months, right? Of course, you don't lose your principal. Whatever happened is low risk, really. And the idea that they were trying to sell to me is that your money is in the bank, you're getting under like 1% when tax. I think because it is tax, your interest, whatever interest you earn, taxes paid on it. But when the calculations were done, from my perspective, it works out to around 9,000 Jamaican dollars. And I'm saying that even though it's low risk, is that a wise investment to just, lock your $1 million away with a bank for 3 months just to get like $9,000? Like,
yeah, well, I mean, you have to look at what the objective is, right? You want to protect your principal, and that comes with low risk. So a fixed deposit is probably what you're referring to here. But there are other products. For example, there are long-term savings products that if you keep the money untouched for 5 years, you don't pay no tax on that, on the interest that you earn, right? So that's another way to ensure that you are saving long term. And if your risk appetite is low and you're not so creative and you're not so aggressive, then you can go that route. But it depends, Omar, on what your objective is. Why are you putting down that $1 million? Is it that you want to focus on growing your capital, getting capital gains, or you want income? If it's income you want, then a fixed deposit is not it. You need to go to the stock market. But if you're going after income, you're going to take the risk of losing some of your principal in the process. So it's a balancing game. And at the end of the day, you have to be comfortable. You have to be able to sleep at night knowing that you're investing your money in accordance with your comfort level. Yeah. So even when the bank comes and says $9,000 for 3 months, you need to say to yourself, am I comfortable with this, or do I want a little bit more? But you have to recognize as well that having the desire for a little bit more comes with taking on additional risk. You don't get turned without risk.
Okay, I see. But, and so Patrick was are there like 4 things, like in the context of Jamaica? What are the things? Because I said now with the downturn in the economy, with all the crisis going on, oil prices going up, so a lot of things going to be affected. What are the best investment options out there? Because I look at like IT Push. He said this earlier up there. He said, listen, though your car is depreciating, when you buy a car, you should use it as a stream of income. Because so he says, I mean, buy a car with the 1 million and run taxi with it, hire a driver, but that comes with risk as well. You understand me?
Exactly,
So,
exactly.
so
Because you have to have the headache of monitoring and maintaining the taxi.
yeah,
The taxi driver not driving the car in certain areas to put it at risk of being damaged and vandalized and so on. People say, well, now it's time to go into farming because food security is a big deal. Everybody's talking about food security, so you should go into farming. Farming is one of the highest risk activities that you can go into right now because
really
we are in a small open economy. We're susceptible to hurricane, to rainfall, little rainfall, and the whole crop flood out
pretty a larceny.
all over, predator larceny, and just to maintain the farm, it's a lot. So don't look at one side of the coin without looking at the other. If you're going after returns, I would suggest that you're looking at dividend paying stocks. And I'm not an investment advisor. Let me just put that out there. I'm not licensed by the FSC to give investment advice, but I can just give you some suggestions to consider.
Yeah.
Dividend paying stocks, right, for companies that are well diversified and vertically integrated, which means that they depend on themselves to sustain their operations, right? And also, if you want capital gains or capital growth, real estate is one option. You have mutual funds and unit trusts that are also able to generate capital gains as well and income, but it comes with risk. So at the end of the day, you need to be guided by the professionals and know what you're comfortable with.
It sounds like real estate is the way.
It would appear that way based on where we are now. Because real
Because
estate,
it's low. Is it low risk? Is real estate low risk?
it is not. It is not low risk, but it is also one of the most reliable appreciating assets that we have on the market right now. And when I say
Okay.
appreciating, because of how the market is, there's strong demand for real estate, even in the midst of a crisis. People are still demanding homes, apartments, Airbnb is an option as well, you know. And so you find that real estate is one of the more reliable, appreciating investment options at this time. But it comes with risk. Comes with risk.
All right. I'm going to take Neil's comment, and then Patrick, I don't know if you have any questions for Odin or anything you want to add. Then Neil says, do they have tax deferred retirement investments in Jamaica? What about NHT? Do Jamaican overseas have to pay 3% of their annual salary to participate?
I don't know about the NHT part, but
I know
yes,
you can still be overseas and pay NHT, and if you're paying NHT up to the point when they have the refund, you
The
can still
refund.
claim that refund.
yes. If you're
Because
still paying it, if you're still paying it consistently, yes, of course.
no man, even if you're not, so, say for example, like I think they are at 2014. If
14
you're
right
paying
now.
it up to 2014,
You can claim back for
you
it.
can still claim it because you may be retired, so you're not
Okay,
paying
yes,
it.
that's your
But you
point.
can
That's your
still
point.
claim it up to the point that you were working in Jamaica, or up to the point you were contributing to it.
Contributing to the scheme, yeah.
Right. So you can always get the refund every year. Yeah.
The tax deferred retirement investments, I do believe that there are some products available locally. But again, you'd have to talk to somebody who works at one of those brokerage firms to get more details.
Okay. Okay. We need to get a investment person and a broker who can come in and just
Yeah.
kind of give some more details in terms of investment options as well. Because like for persons who play sport, they may not have a lot of capital to invest. It may be small, but and then how much do they earn as well? How much do they earn that they can do life insurance and all of those things?
None of those things, yeah.
Yeah, what policy can they afford? Whether it be term or the other one that you described.
Whole life,
Because
yeah.
your earning power may affect the kind of, I don't know, the kind of
Options that you can,
options that you can,
yeah, right.
yeah. But go ahead, Patrick. I know you had something to say or ask.
Yeah, just touching back on a few things that Odin said. People spending more than what they earn. You know, a lot of people are investing, and yet still they don't know what's their rate of return. Right? They have the money in the banks and they don't know what's the rate of return. Um, a lot of people are killing themselves with credit card debts, and it's killing them, and they don't know the rate of return. Right? This just goes back to the rule of 72. A lot of people don't really understand the rule of 72, right? And the rule of 72 goes 72 divided by your rate of return will tell you how many years it takes for your money to double, right? Guess what?
Right. You did that the last time. So just go over it again.
Right?
So yeah.
Yes. So say for instance you're getting 1% from the bank, right? You're gonna do the rule of 72. 72 divided by that 1% is gonna take you 72 years for your money to double, right? How old are we now? In our 40s and 50s, are we going to live to see 72 years? So this is very important, right? For
Yeah.
people to know the rate of return that they're getting, right?
Hold on, Patrick. Is that so, Odin? Does the 72 rule work in Jamaica?
It
It
works
it
a worldwide thing.
I don't know about the 72 per se, but the methodology that he has used is sound. Yes.
Yeah, go ahead, Patrick. Just want to make sure that they don't think it's because you're in Canada saying this, I
No,
want
man,
you to know.
this goes right around the world, man. You need to
Yeah.
know what your rate of return is, right? Because if you don't know, you're losing money, right? Big times, right? And as Odin said, um, he works hard for his money, right? Everybody works hard for their money, but is that money working hard for you, right? A lot of people just spending by that money, while they should have that money working so they can have something on the back end, you know. So they're not basically cleaning up themselves. Get the money.
Your volume going up and down, Patrick. I don't know why. Yeah. Go ahead. Let me see where.
Hold on there.
Yeah, we're hearing you clearly now.
You hearing me now?
Yes.
Yeah. So I'm saying it doesn't really make sense. You're earning that money, and that money is not working for you, right? Um, Procrastination. I hear it on that, Odin, and I smile because a lot of people procrastinate a lot. They know that they need to get something done, and they just sit there and they wait. It's funny. It's funny how someone would put an insurance on a car, but yet still they don't insure themselves who's driving that car. Right? Let that soak in for a little, because a lot of people do this thing. They insure the car, but yet still them don't insure themselves. So the car is more important than they are. We need to look into that. Right? Budgeting. Right? What we do up here, we call it like a needs analysis. Right? It breaks down your income, everything where you spend, your mortgage, your debt, and then what is left. Then we see what we can give you in insurance from what is left. We don't want to take everything from you, right? But short-term goals, 3 months, 6 months, 10 years, right? So that's how we want to break down things for them, right? So short-term goal, as you said, emergency funds, Odin. We were talking about that same emergency funds maybe about a year and a half ago, saying we should have at least 6 months worth of emergency fund. Well, COVID come in and match that, right? COVID has been in for about 2 years, so you see that you need to have more than just 6 months worth of emergency funds. So you have to be saving your emergency fund. You also the saving of 20%, which is good, right? I always say make sure you have a 10% account, right? This 10% is what you take from whatever you make, but Odin says 20%, which is good, right? Once you can manage it, you're gonna work out that 80%. But that 20% account that you have, right? As he said, you don't need to have access to that. That is long term, right? You may have a little side account where you have some money that you want to dip into here and there, but that 20% account should be long term, 10 years, 20 years, right? And there's also on this side the tax-free savings account, right? And also, when you put money in there and you take it out tax-free. It's the same thing with the universal life product, right? And this is one thing I want to touch on too, right? The investment that's in your universal life product, right? After it accumulates to X amount of money after a period of time, you can borrow from yourself. You don't need to go to a bank. You can borrow from yourself now, right? You have your debt benefit, you have your accumulation funds. You borrow from your accumulation funds. You can't borrow from the debt benefit. Even though when you borrow from your accumulation funds, even if you don't pay that back, it will come out of your debt benefit in the long run, right? So you don't have to borrow from the bank. You can use your own investment as a bank for yourself, pay a lower interest.
Yeah. Yeah, listen, what I'd also say to Odin, and this is something that I tried and it has worked, is like my long-term saving, like for my kids, I do it in foreign currency because it is so low risk. Right. So whatever I have for my kids, like the 10-year savings for them, I don't do investment with local currency. I just have it in foreign currency and leave it, because so when it started, just check what the rate of the US was. My oldest son is 10 years ago
10
compared
years
to
ago.
today. But so there's an automatic benefit just by the
Yeah, that's the foreign exchange
the
hedge.
foreign exchange rate.
Yeah.
There you go. There you go.
Yeah, but I would say this though, Omar, that it's good to diversify. And the truth is, we don't. And well, I don't know about you, but I don't earn in US, so I am limited in my ability to save in US. I save in US long term, yes, but I also save in Jamaican dollars because it is the currency that I earn in, and to the extent that I am not going to be buying US dollars every month, and mark you, every month that you buy US dollars, you're buying it at a higher rate.
Higher rate, yeah.
It's depreciating. So you're losing at the onset, and what you lose at the onset, you gain over a long period of time. So I don't recommend that you save in one or the other only. I recommend that you save in both currencies.
Long term.
Long term, yes.
Okay. Okay.
Yes. And short term, obviously, that can go either way. You can save in US only or in Jamaican dollars only if you want. But long term, the benefits that accrue by saving in one currency only will be negated in one way or the other if you only concentrate on one currency. So spread your resources across multiple currencies, multiple asset types when you're saving long term. So real estate, bonds, equities, fixed deposits, treasury bills, those are some of the more traditional options. And you can go into other non-traditional, assets for more sophisticated investors. But the bottom line is to diversify, because diversification is the one sure way to mitigate risk in any one of those types of investments.
Yeah. Okay. Sound advice. Sound advice. Yeah. Neil says that he's his biggest lender. I mean, he lends he lends a lot to himself. Chris Wayne Sovereign, yes, they have tax deferred investment options in Jamaica, such as a
Right, I feel
retirement
that.
investment plan. Check with Sagicor, JMB, etc.
Exactly.
Okay, so there is tax deferred investment.
Yes, yeah,
I
man. We
didn't
have it. We have it. We have
I
it.
didn't even know that.
Yeah, man. There, as I said, these
Oh
these
right, yeah,
products
yeah,
are
yeah.
getting more
Because
and
your
more.
retirement stuff is not taxable.
It's not taxable. There you go.
Right, yeah, yeah, yeah,
There you
yeah,
go.
yeah. It makes sense.
There you go.
Okay.
And by the way, if you don't capitalize on those tax deferrable assets, you're missing out on opportunities to put money towards your retirement, because that money that you are saving in taxes now is going to be available once you retire. So that's another way to allow the products and the channels to work for your benefit. Remember what I said earlier. We don't serve them. They serve
Yes, sir.
us. They
Yeah.
serve our purpose, right? And that's how we need to look at it, because Without us, the financial institutions would not exist. Think about that. So when they provide services and products to us, it is to serve our purposes, not the other way around.
Okay, awesome. And then Neil says, if possible, buy a house / apartment for your son children. Best investment long term. Earn equity and monthly rent. Use the asset as collateral for more investment.
Yeah,
No.
that's actually solid.
Yeah.
I'm actually pursuing that as we speak. You
Yeah.
know, because as I said, real estate is just you can't lose with real estate unless the house just go, the value of the house just go belly up overnight, which is not going to happen in this market.
Yeah. Then IT Push sent something about credit card. It says credit card arbitrage is a process of investing the money borrowed from a credit card in an avenue that has the potential to offer a higher interest rate than what the borrower pays for a direct credit card.
Yeah, I would caution against this. Our credit card rate is in excess of 50% in real. There's no asset right now that can yield you 50% unless you're going into speculative assets like junk bonds and so on and derivatives. I would not suggest that be an approach. Credit cards are for short-term unanticipated expenditure items only. And if you're able to pay off that amount that you have used on the credit card within the cycle, then that is ideal. If you're not able to, pay it off as quickly as possible and keep the balance at a zero. Because credit cards will eat away at your revenue generating capacity.
Yeah, but you don't need credit card. A lot of people say that they needed credit card for when they travel. But with all of these Visa debit cards now, you don't really need a credit card. All you need to do is, like I said, save. Don't borrow for your vacation. If you save for your vacation, then you use the Visa card, the debit card, and you use your own money.
Yeah. Yeah. But I understand why people use credit cards, because it's convenient and it also has a lot of, like, you can get points. You can accumulate like loyalty points and travel points and so on. So I get it. But don't allow the credit card to use you. You need to use the credit card to serve your purpose.
50% interest? Man, I don't know.
Easily.
Because, as I said, the rule of 72 can work for you. And with this credit card, this is how it's going to work against you now, right? So on this credit card, it's 50%, right? 50%. So put a number out there, 50%. So if you do the rule of 72 with that, 72 divided by 50, right? That's like one.
That's 140.
1 year, 1 year and 4 months, if that much. Every year and 4 months, that money double.
Yeah.
In debt, if you don't pay.
Yeah. That's good.
Right? In debt. It doubles in debt if you don't pay any money on that credit card. And if you keep paying the minimum, you probably pay like 3-4 times to that credit card when you're finished.
Yeah.
So
it's a very tempting instrument, but it's also very destructive.
Yes.
And it can erode your credit rating. A lot of companies now are focusing on our credit ratings. We have a credit bureau. And so anytime you go to a bank to access a loan, they look at your credit history. And if they see that your credit card payment pattern is spotty or not consistent, it can go against you, and you can actually be charged a higher rate on your loan than you would have ordinarily been charged if you just either never had the credit card at all in the first place, or if you just be disciplined about using the credit card. So credit cards can be advantageous, but it can also be very destructive. So be careful with it.
Yeah.
Yeah. Nia says real estate is also a good tax saving instrument. You can claim losses and you don't pay capital investment gain when you sell it. When you sell, if you buy more real estate.
Yeah, that's that's what people who flip real estate, right? One of the benefits of flipping real estate is that you get to economize on the amount of tax that you have to pay. But remember that every time you flip a property, you have to pay a lot of transfer fees. And
duties and all of that.
so,
Transfer.
so you're gaining in one area, but you're
Yes.
giving up a lot in the other areas. So be careful about that. And as I said, don't look at just one side of the coin. Look at both sides. What is the benefit? What is the cost? And weigh the cost benefit before you make a move like this. Because it's a very sophisticated transaction, or series of transactions, and it can work against you or it can work for you if you're not careful about how you go about structuring these transactions. So good creative idea, but be careful about the way you approach it.
Yeah. Well, good stuff. Good stuff, Odin. Good stuff, Patrick. And thing really. I mean, want to make sure that we capture all the questions. But Odin, I mean, for those who don't know, I think he went to Saint Diego.
Yes, sir.
Yeah, well,
me a wink it. Labor all.
Yeah, the St. Diego man, and from somewhere up by you, I don't remember which one of those hall, Taylor Hall. So the
Yes,
Taylor,
that one.
so the Taylor Hall youth there,
Yeah, man.
Act like them run the University of West Indies, but they don't. Yeah,
Not anymore. Not since I've left. Not since I've left.
Yeah. But very good stuff and thing. But Patrick, you have like Devon Porter over in your side. So Devon, if you need a Neo,
big up Neo Sovereign.
Yeah, you know that I have a feeling like you and Neo were at probably at Taylor Hall together. I need
to.
He went to Woolmers. He's a Woolmerian. Correct name is Omar.
Yeah. I need to. Yeah, I probably would have to go offline and find out some more details.
Yeah.
Someone's familiar.
Yeah, man. Yeah, so Patrick, so if you're out in North America, in Canada or the USA, like Neo, if you need to know some of these things, you can always check out Patrick. He's at Launch Legacy. Like I said, where they handle risk and seek. Yeah, he's saying that his name is Rogers. Near Omar Rogers.
That name sounds very familiar.
He couldn't play football though, so you may not know him. He was a track and field.
No, man, I know the name, man.
Yeah, so this is attorney, but he's overseas now. But so he's an attorney. He's an attorney.
Good stuff.
Yeah.
Good stuff.
Yeah, man. But check out Launch Legacy. You and Mr. Porter, you can also link Patrick, man, because he will. He just won a major award. Patrick, why don't you tell us about that? You just won a major award.
Well, for the month of February, I end up with a top associate within our branch where we are. So it was kind of surprising. But I was working in silence, so sometimes when you work in silence, your results speak for itself, right? So that was like a big surprise for me. I dropped it on Facebook.
Yeah.
Good stuff.
All right, so tell us about, just as we close. Take some time. Tell us about Launch Legacy and how they can reach. Let me just run the banner, but tell them about Launch Legacy as we come to a close.
As management said, Launch Legacy. We handle risk and seek legacy. I'm more long term, right? So I'm always showing my clients, to be a long-term investor. It pays in the end. Also, what we do here, whenever I do a needs analysis with a client, and if they're short along the line, I also show them a means of how they can earn added income, right? With a career opportunity with what we do here at Launch Legacy, right? And you can do it part-time, right? You can do it part-time.
So what you're saying is that when you're going to present someone with an instrument from Launch Legacy, yes, if they can't afford it, then you give them the option. You give them the option of earning so yes, that they can come up to the okay. That's
Yes.
awesome.
Right. So, it's not just, guess what? You can't afford it. But here, what I'm no man is man. There's an opportunity here where you can come on board, right? Part time and start to earn that extra income on the side, right? So I see even in comments where God bless you, it said term life is not good. But guess what?
Yeah.
What time if you don't have enough money at this point in time when you need some insurance? A little term insurance sets the stage for you. At least you have something. But guess what? That term can be converted, right? That term can be converted down the line. Things may get better, right? So you can confirm that term. So that term really serves its purpose. It has its benefits, right? But yep, for your mortgage, for your kids, and if you don't have enough income at this point in time, a term is probably the best way to go. And then you convert it to a full insurance or anything.
Yeah. And I tell people that one of the things that I have done, I mean, do my pastor, right? Odin, and then I'll close out is I do what one of those FIPs because the monthly payment is very low, like $1,200. It covers like anybody, almost everybody in your family, you the immediate family at a certain age, up to a certain age, and once they if you have a series of unfortunate deaths in your in your family, you can get up to $1 million for each death. So basically, it can, if God forbid you have 4 persons dying like in the pandemic, you'll get $1 million for each of those 4 persons, though you're only paying like $1,200 monthly.
Group package
I,
then.
I didn't hear that, Patrick.
So that's more like a family group package.
It's called Family Indemnity Plan. I think that's what they call it. So I don't know if it's a group package, but what it does, you can add your members. So you
Family
can
members.
you can add your mother, your father. You are on it. You can add your wife. You can add yeah, you can add a sister if you want, if she's, until she gets to the age where she can go on it, do her own, right? You can add your kids up to the age when they can go on their own, and but you and your spouse and the older persons, they stay on it, and you can stop it at any point. So if you calculate it, so when I did the calculations, right, I said, how long would it take me monthly? Maybe you can calculate this: $1,000 a month. How long would it take me to save $1 million? Like how many years? So it's $12,000 a year.
Mhm.
So that's like it's not. It's what? It's how many years? 10 is not 10.
About 80.
Yeah.
Yeah.
So I'm saying that I am going to have this money up until the point I die.
Mhm.
I mean, I know that expenses are, but my family up until 80 years time
Mhm.
have $1 million
Yeah. Guaranteed, really.
guaranteed for
Guaranteed.
for a funeral, right?
Yeah.
And so again, say someone dies, and normally one person don't cover a funeral,
Mhm.
and it may not even be $1 million to do it. So say it's 500,000, the
Yeah.
total expense at the funeral. Your son or your daughter or somebody in your family gets 500,000, because remember, they're not doing it based on the cost of the funeral; it's based on the disbursement.
Yes.
So I think that there are even stuff like that that people can look into, in terms of, you know, it's low payment, but it's high reward
Low
for
maintenance, high reward. Yeah.
yeah, for certain situations. It's like, I don't know if you call it situation. It's I think, is that a form of term investment or term insurance? I don't know what it is called, but think it's something that persons can also look at.
It's
Yeah.
it's technically not term, but it's a variant of term. So you have the ability to access this amount of money up to a certain number of years. Well, up until you die or the
Yeah.
person dies, and what it requires that you continually pay premiums every
Yeah,
month.
everyone.
And it works like a term, and the stigma associated with term being not a good product is, again, you have to make the product serve your benefit. So I am not looking for a huge windfall or income generating capacity from term, because
Yeah.
that's not the purpose of term. The purpose of term is to serve a particular need, which is that you need cash on demand in an emergency. And the other options I expressed earlier about stock market and real estate and so on, those are the products that you target to generate capital appreciation and income generating capacity. So don't look to term for serving the purpose of income and capital growth, because that's not the purpose of term. So I want us to kind of get that perspective and understand that the different products and services that are available, we need to know how they work and what purpose they serve before we can,
Yeah.
classify it as a good product or not.
Yeah. Yeah, man. Awesome. Awesome. Neil, thank you for checking in the service. Yeah, yeah, yeah. Just if you like Jah to trust the bird, man, then you can trust God. You understand me? IT push big up. Listen, I want to thank you guys again for coming on, for doing this. Listen, normally we have a whole lot of people, but I always say this, listen, when it comes on to people, one of the deception about money is that because people have it, they always think they're managing it. And they don't realize that they're not managing the money until they really understand how money works. A lot of people think because they have $10,000 in the bank, they are managing their money as well. But if you were supposed to do, you know, all your debt and all of those things, you'll realize that you are in deficit. If you really did a budget, you realize you are really in deficit. But because you see money in your wallet, you
Mhm.
think you are well off. So a lot of people say, listen, we are talking about as long as me I eat. Or you mean to me not have money? Me want something right now. I can buy it. But they don't
Your net
realize
worth.
that
Your net worth is what matters. Your net worth.
exactly. They don't know the net worth. And if you don't know your net worth, I mean, you're behind the eight ball.
Yeah.
You're already behind the eight ball. So I want to thank you guys for coming on and sharing and just giving your input. Thank you so much, Odin. I know that this took some work. It took some time, because the kids
Yeah.
are getting ready for exams. So we're gonna release you
Yeah, man.
to go and probably look over homeworks and stuff like that.
Yes. Yes.
Tell your lovely wife and kids that we say thank you for
No problem.
allowing you the time and the space this evening to be with us and to share with us from your perspective about spend a little, save a little, and invest a little.
Yeah, man. Thanks
Letting
a
your
lot.
money
Thanks a
work
lot
for
for
you.
having me. And keep safe, everybody. Remember, COVID still keeping.
Yeah,
Another thing
man.
I want to, just drop inside here, information is key only when it's applied.
Yeah. Yeah. I also want to say a big thank you, Patrick. Man, listen, you're always so organized. I mean, you always come in. Listen, I can tell you people, he takes notes, he writes things down. Um, looking forward to next month again, Patrick will have somebody else because we're not going to stop doing this. Because you and I know we have seen the people in sport when they finish playing,
Yep.
how their life look
It's not a
and what
game.
they go through.
Not a
And
game.
if every week one person learns something, if every month one person learns something, this is worth it. So next month again in April, we'll have a next discussion about finances. So thank you so much. Thanks to Launch Legacy as well for being a part of this, for partnering with us on this. We appreciate your time and your company. And so you be safe, and I hope you win a next reward, a next award in the month of March. Working in silence. Let your work speak.
Yep.
Yeah, man.
Yeah, man. Thanks again. Thanks again, Omar, and the viewers. Subscribe. Very nice program. You know, a lot of stories are being told. So, don't miss out. Valuable information.
Yeah, man. All right, blessings.
All right.
Yeah. All right, so there you have it, people. This has been our second webinar on I Am Sure Sports. What a wonderful, wonderful time and discussion it was. Odin White, Chief Risk Officer at the BOJ, and Mr. Patrick Reed from Associate at Launch Legacy in Canada. Hope you'd have learned something tonight, heard something, and you will apply that. You'd apply that. The application of information is very necessary for the transformation. And so I want to thank you for taking time out tonight to be a part of this. Please remember to hit the like button. If you have not yet subscribed, please subscribe. Also, make sure that you share the content so other people can hear and see what we're doing. God bless you. Remain safe and enjoy the rest of your night. I am Man's Man, and this is I Am Sure Sports.